right, welcome. I'm Kit Lyle. This is the Strategic Growth Council. It's a podcast about strategic growth and mergers and acquisitions for the middle market. If you're interested in learning more about organic growth, growth by acquisition, or the sale of your company, well, this podcast hopefully will be interesting for you. Every episode I interview a mover or a shaker in the world of strategy, growth, and M&A. So I'm not sure who the mover is and who the shaker is, but I'm joined today for this episode by John Ziegler and Russ Chapman, partners at Aclaro Growth Partners. Welcome.
Thank you.
Thank you. I'm the mover, by the way. Russ
I'm
is the
definitely the shaker, yeah.
All right. Well, there are a lot of pieces of evidence floating about that 2021 was an unusual year from the standpoint of mergers and acquisitions. What we're here to talk about today is the sell-side market study. Investment banks have been incorporating quality of earnings into their data room that they're presenting to potential buyers for quite a few years. The trend of the sell-side market study began 15 years ago, maybe even longer ago than that, in Europe. And over the last 5 years, it's become increasingly popular in this country, but especially just in the last couple of years. So I'll start, John, Russ, maybe if you could just give us 30 or 60 seconds. We'll start with John, a little bit of background on yourself.
Okay. Well, I'm the CEO of Aclaro Growth Partners. I've been in consulting for a very long time. Joined Aclaro and got into the M&A growth strategy space about 4 or 5 years ago, and we've been growing pretty aggressively the last few years, and of course COVID probably helped, and I'm sure we'll talk a little bit about that today, but I'm happy to be here. Thanks for having me.
All right. Thanks, John. Russ, how about yourself?
That's interesting. My career is a bit longer, and it sort of has three distinct parts. The first part of my career, a couple of decades, were operating positions, primarily working overseas. I became intrigued by the small business as opposed to the corporation, and had an opportunity to run a portfolio company for a private equity group. 4 owners in 5 years. It was quite the ride. And for the last 18 years or so, I've been working with Aclaro, helping them do both acquisition studies, sell-side studies, strategic growth projects. A very interesting and fascinating sort of job to be doing.
Excellent. So that's a good segue. Aclaro Growth Partners serves the middle market as a strategy consulting firm. So you guys obviously have a lot of exposure to the world of M&A, and let's tackle today's episode is all about the sell side market study. First of all, what is that, and why does it exist?
It's a relatively recent development. I think when you think about sellers and buyers in the middle market, they're all risk averse, and anything a seller can do to reduce the perceived risk for the buyers allows him to get a higher marquee price, and it also allows him to assure the buyers that there will be a quick and easy close. And that's what everybody wants. They want to do their deals, they want to do them without risk, and they want to do them very quickly. A sell-side market study is just a massive amount of data that is credible and defendable by us, that allows the seller to know that he's got a great story, and allows the buyer to get comfortable with the opportunity he's embracing.
So just reading between the lines, last year there was an awful lot of M&A activity taking place, obviously. Bankers probably are, I'm guessing, more receptive today than they were a few years ago to the idea of a sell-side study. Does it help speed the process up, John?
It definitely does. That's the intent, or that's the intent from an investment bank to do a sell-side study. The reason to do Q of E also, in the same vein, is to either, you can call it increasing the velocity of a deal, or shortening the length of time it takes to start a sell process and get to the closing table.
And some folks, correct me if I'm wrong, I've heard terms like vendor due diligence, even sell side due diligence, which sounds like an oxymoron to me. You guys call it the sell side market study. Is it all the same thing?
They're the same. I mean, they're all the same. And in some cases, we just call it a market study. Some investment banks don't like hearing sell side in front of it, but um, at the end of the day, it's the same thing.
And who's your client? Is it the investment bank?
That's one of the things that makes it interesting. When it's buy side acquisition diligence, you are on the side of the buyer. You're trying to find any issues that may be there, and it's pretty straightforward and pretty standardized. When it's a sell side market study, you have multiple clients. You're working for the investment bank that needs the information. You're obviously working for the company that is for sale because any information that you glean will be used by them on a go forward basis. And ultimately, you're working for the buyer, presenting a clear picture of what the opportunity is, and you're responsible to ask questions for them later on. So it's a large group of people with many diverse interests.
So when the prospective buyer is reading that report, do they? Is there a lot of pushback? I guess the question is, you mentioned credibility. From my perspective, caveat emptor always comes into play. Do you think the concept of the sell side market study will eliminate the need for buy side, market or commercial due diligence?
I don't think it will eliminate the need for it, but I think it's going to change how it's done. Probably at some point, going to become more targeted about specific issues. But I think we still have a ways to go. There are a lot of middle market investment banks that still don't do sell side market studies on a regular basis, and there's some that still don't do Q of E. Prior to starting a sales process. So there's still a long way to go before I think that becomes a reality, but that is definitely a possibility once it becomes a little bit more accepted or more consistently used.
Yeah, and that brings up another question. If it hasn't yet gained complete traction among investment banks, in other words, if they're not all yet proponents of it, is that because they do this work internally? Obviously in creating a SIM, they have to present a portrait of the market landscape. What do you do differently than what an investment bank could do internally?
I think we do it more completely, more comprehensively. And let's remember, we have a couple of decades experience working for buyers. So we know exactly what buyers are looking for. We can do it quickly, expediently. And, time is money. Investment banks want to get to close, and we can help them save time, do it in a cost-effective fashion, and in a very credible fashion because we know exactly what the market's looking for.
There's also a piece to this that, in the upper levels of the middle market where companies are larger, asking a client who's going to go on the sales process, asking that client to pay for a sell side market study isn't as big a deal as asking a company that's, say, 15, 20, $30 million in revenue, asking them to pay for a sell side market study is a much bigger thing. So there's going to have to be some more track record and some more proof of generating higher multiples to show some of those smaller, lower middle market or the center of the middle market CEOs that it's a worthwhile endeavor.
Yeah, and that sort of begs the question. You mentioned multiples. How do you prove ROI? What is the return on investment for a sell side market study?
I think it depends on the situation. So for an investment banker, if they do sell side studies and it condenses the time to get to the closing table, then they can do more deals in a year, and that's the ROI for them. For the seller, the ROI is I'm getting a better multiple for my company, or I'm getting a better buyer, a buyer that's more interested in partnering than necessarily having a financial transaction.
Can you elaborate on that, on both of those points, on the idea of a better multiple and maybe a better buyer?
So, most, in my opinion, and Russ, you can disagree with me if you want, but in my opinion, most middle market CEOs, if it's a founder-owned business, they're looking to make sure that their employees are taken care of after there's a transaction. They're looking to make sure that company is still there 10, 15 years from now. So they're not looking for somebody to come in change everything that they've done overnight or get rid of people to save a buck. They're looking for the right partner to help grow their business after they're gone. And an investment bank is their whole purpose is to close as many deals as they can in a year. So if a sell side market study, if Q of E done before they start the process helps them shrink that amount of time that they have a company in a sales process, then they can get 2 more deals, and that's the name of the game.
Mm-hmm. And I think, you asked an interesting question, Kid. How do you prove ROI of a sell-side market study? And the truth is, we don't. It's the investment bank that learns through experience that he's going to go faster, higher, better, having sell-side data at his hand. He has to learn that. For himself. As we've learned, some of the banks we work with, and we worked with all of the big ones, there are small groups that have started out using this work, and they're saying, "Wow, this has made our job so much better. We're doing such a better job. We need to tell our colleagues about how this works." So it comes from within the investment banks. We can't go with a quick ROI and say, "Hey, here's the answer." They have to learn it for themselves through experience.
Right. And Russ, so just reading between the lines, you've got the investment bank as we've already learned they're not really the client per se, but they're an influencer, I would assume. We've got the owner, usually a private equity group. We've got the group of bidders, the prospective buyers, and then lastly the management team. I'm just sort of curious about the utility of the report for a management team, because conceivably this is a study that they're going to be able to use maybe in different ways than the buyer would, or perhaps differently than you had intended. That's a question.
Okay. It's interesting. The private equity group that's selling and the company itself, they're writing the check, but they're not driving the process. A seller sells his company once. He is relatively naive. And as John pointed out, he's got a variety of things he's interested in. The investment bank, they do this day in and day out. They are the experts. They are a strong facilitator, but they do defer to the company when making the final decision. The management team is a beneficiary almost by default. They don't have a lot to say in the process, but in our role of pointing out the future growth opportunities, we have to outline what they are and how to get them, how to capitalize on them. And that's information that goes directly to the management team, and they get to run with it. A hidden benefit of the way we do it, every project is bespoke. It's done according to the needs of the client. We have basically 2 sets of data. We have the data that goes in the data room. Everything looks great. And then we have the cold, hard facts, which we need to defend ourselves when being questioned. But it's those cold, hard facts that management loves to have, because they can preempt some of the difficulties they're encountering long before the sell-side process is finished.
So when is the right time to commission a sell-side market study?
In honesty, the sooner the better.
Why is that?
Because you're in just think of, when we think of this we also think of this from the lens of the buy side as well. So you're trying to position a middle market company, and in many cases, they're not as sophisticated as the investment bank wants them to be, or there's some piece of one of their functional areas that's not necessarily, running on all cylinders. And so the earlier you can do the sell side study, the earlier you can identify what some of the opportunities are, the better it is for the investment bank, or the easier it is for the investment bank to then position that company in a way that's going to be most attractive to potential buyers.
Okay, makes sense. So to some extent, you're helping the investment bank coach or prepare management for the tough questions they're going to face during diligence
and post-close.
Yeah. The other thing that I would add about the management team is, we are most successful when the management team is involved in our process of pulling together the market study. When you have, for example, the head of sales is really involved and interactive with us throughout the process.
Sorry, John, go ahead.
Okay.
Back up.
When the management team, so top to bottom, and the management team is engaged and they're interested in the output that we're going to create, uh, our work product is better. They're helping us understand different nuances of their business throughout the course of the engagement. They're helping us, get to the right people within the company, getting us data that we need. It's a much better process when they're engaged, and then they get a better product on the back end as well. They're one of the constituents. So getting that management team engaged early and often is sometimes challenging, but when we can do that, it's better for everybody.
It is easier sailing than the buy side work we do. On buy side, you're the proctologist, you're the Spanish Inquisition. They look at you as if you're looking for problems, which candidly is not totally incorrect, and they can be resistant. When it's sell side, you're all in the same team. Everybody has aligned financial goals. We're all in this together.
Well, I'll push back a little bit on that because the industry of strategy consulting sort of has an ivory tower feel to it, and I think it probably resonates more with the upper end of the middle market than the lower end. Mm-hmm. Is there a size range below which you kind of don't go for a sell side market study? Does it matter? Does size matter?
It does. It's not that we don't go. They don't come to us. Their banks don't come to us. They know straight out they've got limited time and money to put together a compelling narrative. The larger they get, the more time they have, the more money they have, the more diligent and accurate they need to be. And that's when we rise to the surface. When good, hard, fact-based understandings and support of a narrative is required, that's when this stuff really makes a big difference.
So, John, would you say that there is a range a relevant range for sell side, companies that would be interested in commissioning a sell side market study?
There is a range. I also think to Russ's, well, not necessarily to Russ's point, but I would add that there are nuances like how big is the market, how is the market growing. Mm-hmm. If it's a $20 million business in a $1 billion market, and that company's gone from $5 million to $20 million in a year and a half, and it looks like they're going to go to $50 million in another year, then a full scope sell side market study is probably required from the investment bank. If it's a $20-30 million business, it's more likely that they may need a sell side market study, but they're going to be very targeted and focused on what they want in it. So they may come to us and say, well, we don't want everything that you would normally put in a full scope sell side study. Let's focus on the areas where it's going to generate the most energy from potential buyers, or most interest from potential buyers.
Yeah, and early on in this conversation, you brought up COVID, and I can imagine that COVID had an adverse impact on some business owners and sort of timing of when to sell, but it had maybe a very positive impact on others. I also wonder whether there are, do you see? I'm combining two questions here, but the complexity of the deal or the complexity of the market coming into play as a driver of when an investment bank might say, yeah, I think it makes sense. You brought up the concept of a rapidly growing business, so that makes sense. We need to confirm that there is still runway. Is the complexity of the market also a factor? And maybe if there are any comments related to COVID, that'd be great.
Well, I think the complexity of the market is a factor so long as the complexity doesn't allow a potential buyer to see the true full value of the business. So if there are things that you see that sits between two established markets, right? And it's hard for a buyer to understand which market it's in, or if it's in either of those markets, and they don't necessarily understand what the drivers are for that market. A sell side study is a way to help clarify that uncertainty. And to your question about COVID, COVID created for some people some tremendous growth, and they want to take advantage of that growth and that increased revenue while they could, and get on the market as quickly as they could. There's other reasons from a private equity perspective for why you want to get a business in the market. but I think that's a little bit different, a little more nuanced. Russ, what do you?
Yeah.
No, I think, it's kind of a populist misconception is that private equity investors are swashbuckling risk takers. They are absolutely not. They need to do everything possible to mitigate risk. So when a new variable pops up, whether it be COVID or supply chain or inflation or government regulation, that's when sell side work makes the most sense. You need to help them mitigate the perceived risk so that they can move forward with their normal process. And we've had a lot of that recently.
So, Aclaro Growth Partners, how do you guys differentiate in this? I'm going to use the term nascent market, emerging market of sell side market studies. How do you guys differentiate?
I have a couple of thoughts, but I think, John, you can certainly lay in afterwards. Our multiple decades of experience with buy side helps us know exactly what buyers are looking with, how to provide it, how to package it. We're relatively flexible. We don't have a template that we use. We use our flexibility to our advantage to create the narrative that best tells the story of the seller. And we're genuinely curious. We truly enjoy this work and like finding a way to portray things in the best possible light. And it's a lot of fun. So we're flexible. We're aware of what buyers are looking for, and we found a way to tell the story in a way that makes the most sense. John, what would you say?
I mean, there's several layers to this. One is, as Russ mentioned, flexible. I like to say agility. Agility is the term that I describe us. Another is like Russ and like many of our other team members, we have a lot of experience. We don't have very many young 20, early 30-year-olds on our team. We have a lot of people that have been either doing research, have been operators, or have been in marketing departments of large and successful companies. So that's a second differentiator, and the third is we treat the multiple deliverables as a really important piece of what we do. We create a deliverable for the management team. Russ mentioned there's a deliverable that goes in the data room, of course. And in some cases, there's a third deliverable that is just for strategic buyers. There may be some things that you don't want a strategic buyer to see, for the fact that they may not end up being the owner of the business after the project.
Right.
So there's several things. And the other thing is, we're relatively smaller compared to a lot of other brand name management consulting firms that do sell side market studies, and I think our agility, separates us a little bit from them.
You talked about the multiple versions of the report for different constituents, and that strikes me as something that might be intriguing to our listeners that are investment bankers or business owners. Any words of wisdom for those folks that are listening that might be in a position to hire a management consulting firm, a strategy consulting firm, in terms of best practices, processes? What should they be looking for? What should what are some lessons learned that you've seen in terms of doing the sell side market study?
I'll take it outside of what we do first. I think the earlier in the process, the potential macro factors are that could impact the business. So, we've had a couple in the last year where supply chain has been a big issue, and supply chain has been a factor that now buyers are very concerned about. So that's one example on the macro side. The other is, think about the story that you want to tell as the seller or the seller's representative from an investment banking perspective, because what we like to do is think about what is the story that we need to try to either confirm or refine. That's our job, is to help tell that story in a compelling, data-driven, defensible way. So those are two pretty big pieces that are important. Russ, I don't know if you have anything.
No, I totally agree with telling the story. And when it comes time to craft the narrative, I would encourage the investment banks to sit down with their management teams and let them tell it in the vernacular this is who we are, this is what we do, this is why we're better, this is where the market is heading. And once you have the basic structure of the story, then you come to somebody like us so that we can really add meat to the bones and make it credible. Let's remember, buyers are skeptical. They're looking for problems. They will come back and they will hit hard. So if you know what the questions are going to be and you've got the data, it will stand up.
Great. Well, that credibility line is it's reverberating, and I'm sure there are ways to make the data credible. It probably has to do with gathering a lot of it and making it sort of overwhelmingly compelling. So I appreciate your time, John, and your time, Russ. In parting, I'll just ask, how do listeners that might need a piece of strategy consulting work, or specifically a market study, sell-side market study, how do they find you?
Good. I'll go for me first. For Aclaro, it's partners.com, or you can always find me or Russ on LinkedIn. We're always there.
And I would encourage the listeners to understand this is a no risk opportunity. It's a pick up the phone, give us a call. We have plenty of examples of our work. We have dozens and dozens of satisfied customers. Let's engage in a dialogue, and you can understand quickly if there's a good fit or not.
Yeah, I think a redacted example of your work product
Absolutely.
Probably goes a long way. Yep. Okay. Good. Well, thank you both. I appreciate your time. Best wishes to you.
This podcast was produced by Heartcast Media.